Good morning, guys. Happy Monday. And I've got a fantastic guest for the audience today, Rob Haney. He is the managing director of life insurance settlements. We'll talk about all of that. He has an interesting take. We just talked about it backstage in the green room. Um, of note, he's not well liked by the insurance companies, but this is why we have him on the podcast to offer a different perspective, and I'm really happy to have him on. So, Rob, welcome.
Thank you. Thanks for having me, and happy Monday to you as well.
Yeah. Briefly introduce yourself, and then we'll talk about this area of life insurance settlements, which a lot
Sure.
of people
So,
are not aware of.
more than happy. Sorry to jump over your words there. My name is Rob Haney, as you mentioned. I'm the managing director, and I'm one of the three owners of Life Insurance Settlements Inc. We are a life settlement broker. We're based in South Florida, Pompano Beach, to be exactly precise. And we have been for 3 decades the leading life settlement broker in the world as it relates to helping people sell their life insurance policy to a third party while they are alive and use that money for what they needed to use it for. And that could be for anything from helping to fund a retirement account, to look for long-term care, to age in place in existing home, to move into transition into assisted living, etc. Or honest to God, it could be just take a vacation to get the family together for a family reunion, all at the end of one's life with the life insurance policy that they bought for reasons that are no longer there. And that's really why life settlements are important to discuss. And I mentioned to you at the beginning, Chris, that the people do not know that you can do this. In 1911, Oliver Wendell Holmes on the Supreme Court of the United States ruled that a life insurance policy had all the same principles as home ownership. So you can, just like you can take your home and you can gift it to your children, you can take your life insurance policy and make your beneficiary anybody you'd like. And if you decided that your brother-in-law wasn't the right beneficiary later on, you wanted to change it to your sister-in-law, you could do that. Well, now with life settlements, you can take that life insurance policy and based upon two factors, the cost of insurance, how much it's going to cost for the remainder of your life, and your life expectancy, you can take that money, sell that life insurance policy to a third party, and then get that money now while you're alive. So we like to say, kind of putting life back into life insurance.
Yeah, and interesting. And so, this idea of life insurance settlements, why don't most people know about this and talk about that and how people can access that?
So I'll start off with what I tell everybody is we are terrible marketers. That means the whole industry. We've tried for 3 decades to get people to understand that it's here, and we're growing incrementally, bit by bit. We're probably marketing to right now 10% of the population has some semblance of an idea of what it is. So really, the reason that more people don't know about it is life insurance companies, as you mentioned, do not want anybody to know you can sell your life insurance policy. They'll pretend they do, but they definitely don't. So if you're a captive life insurance agent, more likely than not, you're not allowed to talk about it. They'll threaten you with you're losing your job if you tell someone that they can, so you really sign up to be a fiduciary for the insured or the, if you will, customer. But when you're asked to do something that's in their best interest, you're not allowed to do it. And I said, as I mentioned in the green room, that we think that telling somebody you have this option might be the very reason that somebody, when they're 35, 40, 30 years old, buys life insurance to begin with. Because we always buy life insurance. There's a reason why we have it, right? We don't want to use it, just like we don't want to crash a car the second we get car insurance. But if you die prematurely and you're married, you own a home, you have small children, that is an incredible punch to the gut to that family member. Not just your passing, obviously, but the financial burden that you leave behind. Life insurance is there for that protection. But as you move through life, you're 40, now you're 50, now you're 60, now you're 70. The children have left the home, you've paid the house off, you may have downsized the home. All those reasons you bought life insurance aren't there anymore. But what is there is the life insurance premium that's now 3 or 4 times more expensive than it was when you bought it. And you say to yourself, Do I really want this life insurance policy? Is it really necessary? What do people really need when they're older? Well, if they don't have a gigantic, massive estate, they don't need it for estate planning purposes. So they say, what do I really need right now? And as I mentioned earlier with you before we taped the show, which was very simply, I need something to help me as I get older. So that's either long-term care, to get into the right assisted living facility, memory care facility, etc. And a lot of times a life settlement can help do that.
Mm. Yeah. So kind of talking about what are some creative ways you've seen life settlements used in estate planning, such as funding trusts or charitable donations?
Well, that's a great question. And so I live in South Florida, and in the late 90s, I should say, before the turn of the century, we transitioned from what was called viatical settlements into what was called life settlements. So we went from helping people that had terminal and chronic illnesses exclusively to now work with people that didn't necessarily have to have a terminal or chronic illness, but were just older. And there was a very well-off couple who had donated money to a local ballet center, performing arts center. But the problem was he was running into financial difficulty, as was a lot of people around the turn of the century, and didn't want to fund the policy anymore. But the place that he gave it to also couldn't fund the policy. So he looked through a financial planner that we work with and came to us and said, I have I think it was about a $10 million policy and a $5 million policy. And he wanted to gift it to Performing Arts Center. So in essence, we were able to sell his policy. It was on both he and his wife. So it was a second to die. And the money that they got was immediately donated to the third party, and they helped fulfill the dream, which was this Performing Arts Center, to which their names stood on the top of the placard. When you walked in, the building was named after them, and they lived for 8 and 10 years respectively, while they gave that donation. So the beauty of that is the folks that got the money got it tax free. It's their 501(c)(3), and they got a tax uh, donation, and as far as the IRS was concerned, while they were alive. So and there's hundreds of those I can give you, but that's just the basic necessity is you can absolutely take the money, you can give it to anyone you like, whether it's a charitable donation or to help really, in essence, pay for college education for your grandchildren. It's your money. You can take it to the casino and bet it all on black, honestly. But and trust me, some people have. I don't necessarily know them black, but they've bought cars, they've taken trips. But then there's others that have just done, have helped. There's others that have cured themselves, to be honest with you. We've had people that have taken some really aggressive cancers and have left the country and gone and get some really crazy ideas in their head that they can get cured, and some of them have, honestly. So that's the beauty of it. It's your money. You can use it when you want to.
Hmm. Interesting. And along those lines, you talk about because we're a financial freedom podcast, so we don't really, cars and that's all vacations. That's nice, but how can life settlements be leveraged in estate planning to preserve wealth and legacy for kids, their kids, generational wealth?
So let's take the cash surrender value, which is that's the most commonly utilized exit strategy for a life insurance policy. So when they can't afford the premiums anymore, or they just don't want to pay for life insurance anymore. There's a lot of folks that do this. And 90% of all life insurance never goes to claim. So it's either surrendered or it lapses. So our goal with our business is, let's take the people who are going to surrender the policy. They know that's what they're doing, and they're going to use it for estate planning purpose. They're going to pad their retirement. They're going to park money. They may invest it. Who knows what they're going to do? But they're getting out of the life insurance policy. When they know the cash surrender value, what that number is, that's really the first life settlement offer they're getting. They're just getting it from the life insurance carrier, and it's really a return of the investment dollars they parked inside that life insurance policy. We go to market, and our goal is we now know what to beat, right? We know with the cash surrender value is X. So I'm on the board of directors of LISA, which is Life Insurance Settlement Association. I'm the co-chair, and next year I'll be the chair. And I've been on the board 20 of the 30 years it's existed. 3 years ago, we started doing what's called a data collection survey of all the providers that are in our business. And we asked them very simple questions. How much life insurance did you buy last year? What was the face amount? What was the cash surrender amount? And what was the settlement amount? And what was the number of policies you bought? And every year we're reporting somewhere between 5 to 8 times more than cash surrender value. So go back to your original question. What can you do to help preserve wealth? Well, if you can give 100 grand in that effort through a cash surrender value, and you can give 800 grand through a life settlement, what's the better play for you? And we think it's life settlements. Doesn't mean that they'll do it. Honestly, sometimes you'll give someone an offer and it really makes it real to them. Like, wait a minute, I thought I was going to get hardly anything. All of a sudden, you're giving me all this money. I don't know. Maybe I should keep it. Maybe I should keep it. And that's their choice too. That's fine. We just don't want people to make the mistake of thinking, I'm going to keep the life insurance policy because it's worth so much. And if I keep it for longer and longer and longer, it's just going to get more and more money to me. But you're still going to pay the premiums. The whole journey still requires you to put money inside that life insurance policy, or you can pay it with cash surrender value. So we're working with, in the majority of the time, a high net worth estate planning attorneys, financial planners, etc. That's how the business started. What's happened of late, you may have seen commercials on TV. There's two companies that run commercials quite frequently, and that's more a direct to consumer play. And those folks tend to have smaller life insurance policies and also do not have advisors. But they also realize they don't want to pay the premiums and they want to get out of the life insurance policy sooner rather than later. They may or may not know what they want to do with that money. We'll direct them to people if they don't have anybody. It's not us, it's other people that will take care of that for them. But every single individual, and you probably know this better than anybody, is different. It's a snowflake. There's no one or two people that have exact same needs and wants and things that they have at their disposal. Where they live, the cost of living in California is much higher than the cost of living in Iowa. So they're all different. The key is, let's not let an asset get thrown in the garbage because nobody knew there was an option. And that's been our charge.
Interesting. Yeah, fascinating. Next question is, what are kind of the costs, or if someone wants to take a life settlement?
Okay, great question again. There's no cost to get an appraisal. So if you want to figure out what your policy's worth, we will do that. We will go to the market on your behalf. We will pay for medical records, provided it meets the initial underwriting criteria. And we'll request insurance illustrations. We'll take it to the market, and we'll get you an offer, or we won't get you an offer. We'll come back either way with an answer. If we go forward and there is a offer that's presented, a commission that will be earned either by me or shared with an investment advisor will be 100% disclosed, because this is one of the rare things about life insurance with us is we disclose the compensation, unlike when you buy it, where you don't have any idea that the guy that sold it to you is making 140% of the first year premium. We let you know that's negotiable. There's nothing set in stone what the fee is. It is, if we have to bend and stretch, if you will, to get the commission compressed down to such a point where the client gets what he or she needs, we'll do that. But we do want to be paid, because that's how we actually market and pay for homes and colleges, etc. And we do a good job and we earn it. So the most part, we do not let commissions get egregious. In industry, we do not allow any commission to exceed 1/3 of a gross offer. So there's no insane commissions that are being generated. So we're trying to make a little bit of money on a lot of transactions in a calendar year, and that's how we survive.
Interesting. How could people find you and learn more about this? Because you help people navigate the complexities and leveraging these insurance settlements and maximizing one's policy.
Well, we're easy to find because the name of my company is Life Insurance Settlements, Inc., which is exactly how we are regulated across the country. Our website is www.lisettlements.com. Like I said, mentioned earlier, I'm on the board of director of LISA, which is an organization comprised of other members of this marketplace. So there's lots of good options for people, lots of real good professionals in the business. My competitors are also my friends, honestly, except when I'm competing against them on a daily basis. But after that, we more or less are, because we're all fighting for the same thing, which is just awareness. I mean, awareness is the toughest thing to come by. We are a relatively small marketplace. We did $5 billion, $6 billion in sales. One year we did 12 billion. Just to put that in perspective, every year on top of that, about 112 billion lapses or are surrendered for people that are just 65 in the United States of America. So we did 5 billion last year and 112 went in the toilet. And we think that that is terrible. Not all 112 billion would have worked, but I promise you another 25, 30 would have. So we've got our work cut out for us. And it's an emerging industry. We're getting more positive publicity than we've ever gotten before because we've been around for a longer period of time. In the beginning, it was easy to beat us up because we were new and we were little, but now we're getting more sophisticated. One of the companies in our business has gone public. So there's and public in a good way. They're running commercials. Coventry is another one. So Abacus and Coventry run commercials. They are people that we sell to. We're probably their biggest suppliers of life insurance policies to purchase outside of their own efforts, direct to consumer model. So that's how I would find me. And then if you can remember how to spell Haney, you just stick that into Google. There's not many of us, and I'll usually pop up maybe on your podcast if we're lucky.
Awesome. I really enjoyed that and really interesting slant and take. And thanks so much for coming on and to your continued success in 2025.
I appreciate it. Thanks for having me. I really